Hello my fellow freedom builders and welcome back to the channel. We have begun a new week. It's Monday the 24th of April and I'm going to give you a very quick update on the earnings report from last week here from Factset. We're also going to have a look at a single company giving out earnings today, and we're going to have a look at some really dramatic things that is going on in the 1 month yield, the 1 month bonds here from United States. But let's start here at the Factset. As you might remember from last week, I was looking at their report when there were only 6% of the companies that have come out with their earnings report. Now it is a bit more. We are up at 18%, and my argument last week was that if we could keep up with the earnings surprises, we might actually be at a point where we had seen the earnings recession, you could call it, bottoming out. And therefore, we might actually see the bottoming out of the stock market that we have seen lately be the true bottom. That was at least my thesis, my theory. And what we're looking at today is that 18%, or that was Friday, 18% of the S&P 500 companies have reported actual results. From that, 76% of them have reported positive earnings per share surprises. Now remember, the earnings might be down from 12 months ago, meaning that it is some extra fuel on that earnings recession talk, but the companies have lowered their expectations so much the last 3 to 6 months, so that the market has dropped quite a lot, meaning that when they are surprising positively now, that can be some fuel on a market bottom structure that we are seeing right now. We can also see that 63% of the S&P 500 companies have reported a positive revenue surprise. So a bit less than that, but still more than half. So that is the news here. I will link to this report below. You can see there are some S&P 500 net profits. You can see them back from Q2 18 to Q1 23 here. And you can see that, yes, they have dropped, no doubt about that. But we are actually on par with the level that we were on in 18, 19 here. And then, of course, it dropped with the virus in 2020 and then climbed up again. So we are actually at a fairly good level, and you can go through the report yourself and look at the different sectors and so on. I won't bore you with that right now. I just wanted to give you this quick insight. Now on the earnings today, I'm using the daily FX, as you might recall. There's not too much coming in today. Tomorrow we're going to have 40. Now that is spread all over United States and Europe and so on. And the next 7 days, 162. The big one today on the US front is right now Coca-Cola, that came out here 2 hours ago. And what they did was they actually also beat the forecast. They had a 0.68 in earnings per share. The forecast was 0.65, and actually the previous was 0.64. So that was a positive surprise here. And the revenue was also a bit higher, 11 billion versus 10.81 billion in forecast and 10.5 billion previous. So Coca-Cola is also surprising positively. Cadence design systems are coming out later tonight, but I'll have a look about the next week here to see what is coming out, and of course I'll give you an update on that. But that was my thought on that. A quick little update here. When I did my weekly video for my Danish subscribers, I actually thought that TradingView had a glitch in their data, because what I did see here, I don't know why I hadn't caught that, but over the last 3 weeks, the 1 month yield had dropped from 4.7 to 3.3%. That is crazy. You can see the other shorter terms here. We have the 2 month, 6 month and 1 year. At least the 2 and 6 month are still going up here. 1 year dropping a bit. But what has happened, because this wasn't a data glitch, that was just me falling asleep behind the screen here. What actually happens, and now you can't see it here because there's some limit if you have a free test of MarketWatch. But what is actually happening is that there is a growing worry about the US debt ceiling, which makes the investors so nervous that they don't want to tie their money up in 3 or 6 or 12 months US bonds because they are afraid of what is going to happen. Now, if you haven't followed the news, then there's this debt ceiling issue. And if that isn't raised, and that it is normally raised, that's just a formality normally, but if it isn't raised, then basically United States can't spend any money. There are a lot of salaries held back, and there are a lot of expenses that they can't spend all of a sudden, meaning that United States are basically coming to a halt. And last time that happened, that is some 10, 11 years ago, it actually resulted in United States being downgraded on the credit rating by the big credit rating companies. Now, if that happens, it would mean that the interest rate for United States to borrow money from abroad would probably go up a bit. Now, what happens when the yield is going up? Well, that means that the bonds are dropping. So the investors, they don't have the nerves to sit on bonds that mature in 3 or 6 or 12 months because they have no idea what is going to happen. If you have followed a bit about the US politics, you know that there are some a very right wing in the Republican Party that have kind of taken the rest of the Republican Party and maybe even the entire House as kind of a hostage. And when they had to vote for McCarthy as Speaker of the House, they said we're only going to vote for him if we're getting a lot of power. And they got that power so that McCarthy could be Speaker of the House. Now, what is happening now, and that is at least what investors are speculating about, is that they might use their power simply to say we won't raise the debt ceiling. And if the rest of the Republican Party are voting to raise the debt ceiling, then they will kick McCarthy out as Speaker of the House, and then the circus starts all over. Now, that is what the investors are really afraid of, and that is basically why this yield drops so much and the other shorter terms here are going up. We can also see some of the longer terms. So that will be very interesting, and I'll give you an update on it as soon as I have some news on this debt ceiling thing, because normally it's not a problem. It's just there's a little fuss about that, and then they raise the debt ceiling. Now, this time we might actually see that 15 or 20 members of the Republican Party will take the rest of the House and the rest of the US economy as a hostage in the process of getting some things through with their own agenda. Now, you can be pro or con these 15 or 20 people, but you can't deny that they have worked themselves up to have quite a lot of power. And well, let's see what they're willing to do. At least the investors, they don't dare taking the chance on this. So they are only buying the very, very short-term bonds, and then they're leaving some of the a bit longer term, 2 and 6 months. They simply don't have the nerves to hold as many of them as before. So that is what is happening with the interest yield here, or the bond yield, which I thought was a data glitch. It isn't, and let's see what happens. I won't tie you with any more data or charts today. I just wanted to give you a quick update on the earnings seasons and this yield development, and I'll be back with 1 or 2 videos later this week. I have picked a couple of interesting stocks I think we can do some interesting analysis on. And by the way, just for the information, I bought the Applied Materials stock the other day that I did a video on. I bought it a couple of days later, just so that you know that I'm actually just to disclose my own positions here. I actually bought the Applied Material. So far so good. Let's see what the week will bring when the earnings really start to roll in. We also get some PCE numbers later this week. I'll give an update on that Friday. Bye for now. Take care of yourself and your money out there.